Hello guys, I welcome you all to today's video. For the past few days we'll be checking out how we can detect spikes while trading boom and crash, and it's been a beautiful training journey, and I'm really happy that you guys are really following up here and you are enjoying every part of it. Today's zone will be the last part of it, and of course we will be checking out how we can do this easily, how we can detect spikes in boom and crash easily without having much stress. I've given you the basic, the foundation, how you can easily analyze even without using any indicator. But this time around we will try as much as possible to make it easy for each and every one of us, so that we can easily say that okay, spikes is about to happen around here, or probably this is when we should trade and this is when we shouldn't trade. Okay, so all you just need to do is just to stay tuned and watch this video to the end. You're going to love every bit of it. Okay, and if you love my videos, can you give me thumbs up and share with families and friends? And if you are yet to subscribe to this channel, can you do so right away so that you can be notified whenever I upload a training video like this. So you can also join the Telegram channel too, so that you can benefit from the training and other trading activities that happens within the Telegram channel. Okay, so that is very, very important. So quickly, let's go straight into what we have right here. Like I said, we are looking at how we can detect spikes in boom and crash, and if you have been following up with my videos, you will notice that I've given you different scenarios that can help you to identify when spike will happen with just the technical analysis. Okay, like I said, spikes usually happen, it actually depends on the asset, either it is boom or crash. Okay, forget about the indices, probably maybe 500, 300, 1000, they are all the same. The most important thing is you separating boom and crash, okay, because they work opposites in opposite direction of each other. Okay, so that is very, very important. For boom, spikes usually happen around the support zones. So if you should check out the support zones, you will notice that we've got a lot of spikes happening. Here is a support zone and spikes happen around here, and if you should notice, when it got to that same support zone, it also happened around there. Okay, sometimes it will break out from there. Because it breaks out from there does not mean that it does not obey the price action, but there will always be breakouts. Okay, more especially when the trend is in that is in the opposite direction of where the spike is supposed to happen. Okay, so there will be breakout, but in most cases you should expect you should expect it to respect the price action at that point. But once there is a breakout, there is nothing anyone can do about it. Okay, there is nothing anyone can do about it, so you should have that at the back of your mind. Then another thing you need to know is that for crash, spikes usually happen around the resistance zone. You can see these spikes happening around this resistance zone, so all these are very, very important. Okay, so once you understand this, then you won't have any issue on how we can trade this asset, and you will be able to avoid it if that is what you want to do. And another thing you need to take note of is that you need to know the trend that we usually have spikes happening, because there are some trend that you shouldn't trade spike. Okay, if you truly want to trade spike, and if you want to avoid spikes, there are some trend that you shouldn't even be in the market. Okay, because around that time you will be seeing more spikes happening around then. Okay, for instance, for boom, when the market is on downtrend, okay, when the market is on downtrend, you don't need to think of trading spikes, because most support zones can be broken around that. Okay, because the market is not in favor, the trend is not in favor of spikes at that particular point. That is when we have more bearish candles being created at that point. If you should check it out around here, you can see we had more bearish candles being created at that point. But if the market is on uptrend, okay, that's the best time you should trade spikes. You can see the long candles, spiky candles that are happening. You can see this. Check out this. Check out the numbers of spikes that happened around there. You can imagine. So all these are very important. So all these periods are very important. It will help you to understand when you should trade spikes and when you shouldn't trade spikes. Okay, the same thing is applicable to crash. Okay, when the market is on uptrend, I won't advise you to trade spikes at that point, because most resistance zones will be broken at that particular point. Okay, because the market is not in support of spike trading for crash at that particular point. You can see these are bullish candles going for a very long time before having small spikes happening in between. So here is a resistance zone around there, and it was broken. It didn't even respect it at all. There was no spike happening around there. It happened here, but it didn't happen here. The reason is the market is not in favor of spikes trading at this point. So that is why you don't need to bother yourself about spike trading at that point. You just trade the normal trend at that point. But at this point, if you are the type that you don't know how to trade spike, I won't advise you to trade the normal trend around here, because you're going to get trapped in the market and you will lose your money. Okay, you can see this. Okay, check out this. It kept on crashing and crashing till it got to this region. It went up again, it didn't get back to your entry point, and it crashed again. Went up again, still didn't get back to your entry point, and it kept on crashing and crashing. And you can see this. Okay, so for how long are you going to wait? Will your capital be able to hold you until it gets back to your the trend that supports what you actually came in for? So if your capital will not hold you till then definitely you are going to lose all your money at that particular point. So within this region, I won't advise you to trade spikes around there, because the market is favoring I won't advise you to trade the normal trend around here, because the market is favoring spikes trading alone. Okay, so all these are very important. Okay, so another thing I need you to know is that there are some good indicators that will help you to know when to go into the market and when to exit in the market. For instance, let's say you don't want to trade spike. You already know that if you don't want to trade spikes for crash, then you should trade when the market is on uptrend. This is a very good indicator. It is called 3M trend milker indicator. This is the indicator that most of my subscribers have been using to milk the market successfully. This is what you need to do. You only need to come in when you have a yellow like banner like this, okay, or flag. I usually call it flag, okay, like this. So once you are having it, then you can come in, and you come in when you have the entry signal like this. Okay, then you trade within this region, because this is an uptrend region. But when you start having red flag like this, then definitely you should know that the market is on downtrend, and for crash, downtrend is favoring spikes trading. Okay, so you know, let's say you want to avoid spike, then you should know that at this stage you don't need to trade the normal trend, which is the bullish trend. You don't need to trade it here, because you are trading against the trend. At that point, you're going to experience so many spiky candles around there, and that is what we are seeing around there. Okay, but for those of you that want to trade spikes, once you see that this has gotten to the resistance zone, and we've gotten our red flag showing, we've gotten our arrow telling us that we can come in now, then definitely this is the best time to place your order. You can imagine you placing your order, right? It might not go into profit immediately. You know, this is spikes, okay, and that is how it works. Okay, you placing your order around there, and after being in the negative, or playing around in negative region for a very long time, for a few period of time, it started spiking. It's experienced the first spike. You can see this will be in profit. It will start being profits right from there, and it got to this region, pulled back up, came back, and went back, almost getting to your entry point, then started spiking down again. It crashed down till it got to this region. You can see how much profit you would have made at that point. Okay, so that is very, very important. That is why it is important you understand all this, most especially if you are having a very good indicator that can direct you on what to do, okay, that can help you to analyze the market within seconds. Okay, within seconds, then definitely you are good to go. So that is why this indicator is so important for you guys to have, for those of you that are not having. Okay, but for those of you that are having, I know that you guys are taking advantage of it already. So that is what we can achieve with this particular indicator. So apart from the custom made indicator that is helping us with this, the most important thing in this video is that you should know when to trade the spikes, or when we will be having more spikes happening, and you should know when you can trade in normal trend, when we won't be having a lot of spikes happening. Okay, so and each of the assets has its own way of trading it. For instance, for boom, spikes usually happen around the support zone, and it's usually happen when the market is on uptrend. So if you don't want to trade the spike, then you should trade the downtrend. But if you want to trade the spikes, then you should focus on the uptrend and the support zone. That is for boom. For crash, spikes usually happen around the resistance zone, and most especially when the market is on downtrend. So if you don't want to trade the spikes, do not trade it when the market is on downtrend. Trade it when the market is on uptrend. So you only trade the bullish candle when the market is on uptrend. Okay, and of course guys, if you want to trade the spikes, then definitely you should trade the markets when the market is on downtrend, and you should check out all the resistance zones, because those are the places that spikes will definitely happen. So that is what you need to know with this video. Okay, so guys, I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and all you just need to do is just to understand every part of the explanation in this video, and go back to your chart, do your setup. You can have your setup. If you're having this kind of indicator, have it on your demo account so that you can practice with it. But if you're not having whatever setup you want to use, you can use it. It's not compulsory. You have this same setup. So far you are able to identify some of the things that I have highlighted in this video. Then now practice and perfect it very well before you go fully out into your real account. That is very, very important. Okay guys, I will be stopping right here. Remember, you are free to ask me whatever question you want to ask. Just come to my WhatsApp, send message to me, and I will reply you. It might not be immediately, but I'll try as much as possible to reply you almost immediately. Okay, so that is that. Okay, and if you are yet to subscribe to this channel, can you do so right away? And if you are yet to turn on the notification bell, please do so, so that you can be notified whenever I upload a training video like this. So guys, watch out for my next video. Until then, God bless.